Hello, savvy investors. Welcome to Daki Finance, your go-to channel for all things personal finance. Today, we're diving into the top 5 investment securities that can boost your portfolio in 2024. Whether you're a seasoned investor or just starting out, building a diversified portfolio is key to weathering market fluctuations and maximizing returns. We'll break down each security, discuss its potential, and see how it can fit into your investment strategy. Let's get started. First up, we have Treasury bonds. These are debt securities issued by the US government, and let me tell you, they're considered one of the safest investments out there. When you buy a Treasury bond, you're essentially lending money to the government, and in return, they promise to pay you a fixed interest rate for a set period, also known as the bond's maturity date. Now, you might be thinking, Graham, bonds? Really? But hear me out. In times of economic uncertainty, like we've been seeing lately, investors flock to safety. And guess what screams safety louder than Uncle Sam himself? That's right, Treasury bonds. So, if you're looking for stability and a guaranteed return, Treasury bonds deserve a spot in your portfolio. They're like the reliable friend you can always count on, even when the market throws a curveball. Now, let's shift gears and talk about corporate bonds. These bonds are issued by companies, not the government. Think of it like lending money to your favorite Fortune 500 company instead of Uncle Sam. Now, historically, corporate bonds have offered higher returns compared to Treasury bonds. Why? Because there's a bit more risk involved. After all, companies can go bankrupt, governments, well, not so much. But don't let that scare you off. If you do your research and choose bonds from financially healthy companies with a solid track record, corporate bonds can be a fantastic way to potentially earn higher returns and diversify your portfolio. Remember, diversification is key. It's like having multiple income streams, spreading your risk and increasing your chances of financial success. Now let's talk about index funds. These are like the superheroes of the investment world for beginners and conservative investors. Imagine owning a tiny piece of hundreds of different companies with just one investment. That's the magic of index funds. They track a specific market index like the S&P 500 or even indices in EMEA and European markets, which means you're automatically invested in top companies across these regions. Talk about diversification, right? But here's the best part. Index funds are known for their low fees and historical growth potential. They might not make you rich overnight, but they offer a steady and relatively low-risk way to grow your wealth over the long term. Remember, Rome wasn't built in a day, and neither is a solid investment portfolio. Now, who here loves real estate? I know I do, but buying properties can be expensive, time-consuming, and a logistical nightmare. That's where REITs, or real estate investment trusts, come in. REITs are companies that own, operate, or finance income-generating real estate. Think shopping malls, apartment buildings, even cell towers. When you invest in a REIT, you're essentially becoming a part owner of these properties without the hassle of being a landlord. And the best part? REITs are known for their dividends, which are regular payouts to shareholders. It's like getting a little rent check every month, but without the leaky faucets and tenant complaints. REITs can be a fantastic addition to your portfolio, especially if you're looking for passive income and exposure to the real estate market. Last but not least, let's talk about dividend stocks. These are stocks that pay out a portion of their profits to shareholders, typically every quarter. It's like getting a bonus just for being an investor. Now, not all companies pay dividends, but many established and profitable ones do. Dividend stocks can provide a steady stream of passive income, which you can then reinvest to buy more shares and grow your portfolio even faster. It's the magic of compounding. And here's a little bonus. In many countries, dividend income is taxed at a lower rate than regular income. Talk about a win-win. Dividend stocks are like the gift that keeps on giving, providing both potential growth and passive income. And there you have it, folks. Our top 5 investment securities to boost your portfolio in 2024. Remember, diversification is key. Don't put all your eggs in one basket. Spread your investments across different asset classes to minimize risk and maximize returns. If you found these tips helpful, be sure to give this video a big thumbs up and subscribe to Daki Finance for more financial wisdom. Stay financially savvy and see you in the next video.